Well, hello. I'm Chris McAlpin, the managing partner at Sound Financial. And I'm talking in this particular video and in the article that'll be attached somewhere around the video. Our team always puts that kind of cool stuff together. I'm talking about retirement planning in uncertain times. And what are some strategies, 5 strategies, in fact, that you can use to protect your future? Certainly, gosh, in the last 4 years, we have all felt overwhelmed with global uncertainty, and global pandemics and wars and rumors of wars and market volatility, from inflation to bond market crashes. And there's been shifting financial realms all over the world, from central banks doing their thing to unions striking, and ships being stacked up into the ocean and slow to bring in products into the United States. Now the political landscapes have changing from the White House to the House to the Senate, and all of this is pretty certain change, that is, in our nation's history. And so we want to be able to plan for retirement in uncertain times. I got to tell you, I've been a financial advisor for a few decades, and I can't think of a time in my career when I can go back into that history and say, oh, those times were certain. It was pretty easy, because only, I think, in our history books do we look back and say those times were certain. I think all of the times that we're living through, especially when you're looking at this great life change like retirement, even if you're planning for it a decade away, those times feel uncertain. And so you need to be able to plan and maneuver during those times. I tell our clients all the time, retirement's not like a commercial. You don't just press pause on life. You'll still get the car fixed and replace the air conditioning and want to renovate the kitchen and the bathrooms and go on cool vacations. There's things that still happen in life in retirement. And so those things, those changes call for uncertain times, and you want to be able to adapt to those uncertain times. So here we go. There's some things that happen in retirement that we know for certain cause uncertainty. Number one, that's market volatility. Financial markets have been fluctuating over the last 4 years. The U.S. stock market has really run up. Everything else sold off, and that is everything else sold off. And that kind of creates the hesitation for us that, when's the other shoe going to drop, with U.S. markets? But we'll see. Predictions themselves are dangerous. Ray Dalio once said, "He who lives by a crystal ball will eat shattered glass." We've also dealt with inflation, just the rising cost of stuff. Longevity risk is a risk you'll face in retirement. We are living longer, many times whether we want to or not. And healthcare costs. Just like everything else in life, healthcare costs are going up. And so what is the impact of market volatility, and what are some strategies you can use to defend against that? Certainly, market volatility, especially when stocks go down, it impacts the overall portfolio, your net worth, your ability to create income in retirement can be affected when stocks sell off. Quite frankly, when bonds sell off, it can affect it as well. We just don't see bonds sell off that often, but we did see it in 2022. And so sudden drops in market value cause fear, cause panic, cause adverse reactions. But not investing in growth positions like stock can cause your portfolio to not keep up with your income. So you've got to balance that out. One of the ways you do that is with a diverse portfolio, dividing your investments over multiple asset classes such as stocks, bonds, real estate, fixed rate products, etc. Another way to defend against market volatility is adopting a conservative withdrawal strategy. Traditionally, a 4% income rate has been considered prudent. And for many retirees, this has stood the test of time. Rebalancing your portfolio, especially with a rules-based portfolio construction, is an excellent way to keep that portfolio aligned and keep your risk parameters in line, throughout the ups and downs of the market. Another strategy for you to consider during the uncertainty of markets, that is to ensure that you have income stability during economic downturns. One of these ways that you can do this is to create a bond ladder, or use annuities for guaranteed income. You might want to delay taking Social Security benefits or consider dividend paying stocks. All of these, in fact, blending some of these strategies together are some of my favorite ways to create a retirement income plan for our clients. But what is the role of diversification? That's a big one. The role of diversification. Well, the diversification is a risk management strategy whereby you divide your investments over stocks and bonds and different asset classes. In fact, King Solomon wrote about this in Ecclesiastes 3,000 years ago. Ecclesiastes chapter 11, go check it out. But the 60-40 model, the traditional retiree portfolio, the classic diversification mix, this has certainly stood the test of time. It's been around for decades, and many, though, are even calling this the 60-40 model dead. I have my doubts that it's dead, but I think that diversifying over stocks and bonds only can be dangerous in these current uncertain times. I think you should consider multiple asset classes like commodities or real estate. I think you should consider some actively managed investment choices within those asset classes. So bond and fixed income securities, real estate, alternative investments like commodities, hedge funds, or private equity positions, or ETFs that mimic those. International exposure. International has lagged the US over the last decade or so, and is really, the data points to it being priced to outperform over the next decade. Another strategy that you want to consider, and the last one that I'll mention, is to reassess your retirement plan in light of changing economic conditions. You should review your asset allocation, adjust your portfolio mix to match your current risk tolerance. Know that there are risk return trade-offs, but if you're just fearful, maybe you want to back down that asset allocation to a more conservative portfolio. You should also update your income projections. The 4% rule does not always work. It is not guaranteed to work forever. So you might want to consider lowering your income or consider your income rates. You want to evaluate your health care and your long-term care costs. We know that this is getting more expensive, and you just should evaluate it. Also, you should plan for longevity. Know that modern medicine is just keeping us alive longer than we want to sometimes, unfortunately, and it's just getting more expensive. I feel like this is such a downer video, quite frankly, but retirement can be wonderful. It's a freeing time. I look at our clients so often, and I feel like they look like they're 18 years old, except that they have money. It's like going to college and you've got a little bit of money to spend. It can be a wonderful time. It can be very productive, where you can be very purposeful in spending time with your family and spending time in those charities and ministries that mean the most to you. You can also play a lot of golf. But I want you to consider how you should spend retirement. During uncertain times, it requires a very proactive approach. Not everyone's happy to hear what I'm about to say, but you may have to work a little bit longer. You may need to start a second career or get a part-time job. Work is a good thing. You might need to consider, let me say it like that, working at something you love to do. You don't have to have that 40, 50, 60-hour week that you've spent for 30 or 40 years. No, I don't mean that. But you might need to consider working a little bit longer. You want to consider diversifying your investments. You want to manage market volatility. In fact, let me say that differently, because you cannot manage market volatility. You want to respond or manage portfolio volatility, your portfolio. You want to ensure that you have stable income sources so that you can stay retired. You want to think ahead regarding healthcare costs. Regularly reassess your plans and make adjustments that you need to make to keep you on track. If we can help you in any way, please give us a call, 601-856-3825, or shoot me an email. And that's cmcalpin@soundfsg.com. That's CMCALPIN at sound, SOUND, FSG.com. Take care.